Hello everyone, this is Steve Reiser from Top Gun Futures. Tonight I want to go over a post-trade analysis routine that I use and recommend for everyone to help discover the truths about every one of your trades. I think you should do this at the end of every trade so that you will get better and that you will learn and not repeat mistakes and repeat those things that made you go correctly. Now, there was a pilot who went and spoke, and it was recorded and put on YouTube that I watched, that reminded me about how important it was to do an after action review, a post trade analysis. I've been doing this, but it wasn't as formal as what this was done, so I've modified my process to basically follow what we used to do in the fighter community. There are 5 steps we went through. What happened? What did we do right? What did we do wrong, or what could we do better? Why did it happen? And going through the lessons learned. All right, let's step away. All right, I'm going to take us to the first trade that we had of the day, approximately 10:20 on Tuesday, the 14th of August, 2018. What we did is we were watching, and finally the NASDAQ, after about 45 minutes of trading, broke a significant level up here around 74.18. And we're watching for an entry. We're watching for the break, then the pullback, and then the break on the second time for the entry. All right, you can see from the arrow, that's where I entered. What was I doing that was right? I was being patient. We went over 45 minutes, 50 minutes into the trading day before we pushed the button. We did the zigzag pattern, breaking above this swing level, pull back, and went through it the second time. All right. Now we're in a breakout mode. I'm on a Unirenko 6 tick, and I'm following it here. We had a volatility flip. Now the counterpunch trader system is keeping the stop down where it was. The volatility stop is raising up. Volatility stop is raised to about the prior level. We went to the primary pivot, which I knew was there, and I knew we'd get a reaction. What I didn't figure on or count on was how deep the retracement was going to be there. Well, we had a pretty weak morning with not very much follow through, so I should have probably anticipated and either not gone into the trade or given it more room. And then what happens is we get right here, and now we've got the counterpunch trader is a 74.18 half, and the volatility is 19 and a quarter. I basically got stopped out on that next candle when it dipped all the way down to 74.18 half, which took out both of the stops. The momentum oscillator when we entered was up here around 4. The squeeze actually started turning up after for one candle, and then it reversed back down. And if you look at the slope here, it's basically down. So this wasn't a really great entry on both of those, not compared to what it was earlier over here to the left. What I want to do also is I also want to show you that their Unirenko 10 tick, same time frame, 10:20, got a buy signal just at the primary pivot or just under it, basically the same level that we had on the 6. The momentum oscillator on the 10 was pointing up. The R squeeze was up, but it's pretty high. That's the only part that's kind of a negative there. It did a 3-bar continuation pattern, and we see that over in the favorite patterns, where the first candle, second candle, and the third candle, and then it continues to move higher. And you can see here that other than that first candle, there's the stop. These are the volatility stops moving up. We really didn't get ourselves into much danger here at all. What am I learning from that? What I'm probably learning here is that the 10 yen Renko, the 10 tick, is probably the better one to trade on. The 6 gives me more signals, but it'll give me more false signals. It will get me in sooner, and I use a combination thereof, but I need to make sure that I give the stock or the future enough room to wiggle. Now the problem that we've got is that over here when we had this signal, the stop risk was 42 ticks away. 42 ticks away on the 10 yen Renko. That's what it needs to be down here at the prior swing. If it's not down there, and I can't take 5 times that as a risk, I have no business getting into the trade. I need to maybe take it down to 1 contract if I can't stand it. All right. What I'm believing happened, in my heart of hearts, is that yesterday I had a bad day and I had almost $560 loss. And I said, oh no, here we go again. Here we go again, and it stopped me out. Or it was going to go down. I saw it coming down because what it did is it was red here. Let me draw the candle. Color. Red. This wasn't a green candle when I got out. When I got stopped out, that was a red candle just like that. And I'm going, here we go again. So I stopped myself out. Well, I also stopped out by following. The good part is I followed the rules. The rule said that you should get out when the volatility stop or the CPT stop is hit. So I did that correctly. I'll have to give myself credit. What I'm going to kick myself in the backside again is, here's yet another move to the primary pivot. We have another signal above the primary pivot. We move above it. Remember the zigzag pattern we're looking for, a break above and a pull back, and it pulled back, and then go long the second time. Why didn't I get in here? I have no idea. All right, one other thing that I didn't do right. Back over here. There's a trade. Is there anything wrong with that momentum oscillator coming up through the 0 line? No, that's ideal. Is there anything wrong with this R squeeze being a little bit above the 0 and coming from the 0 negative area down to up to the positive area? No, that's almost ideal. These don't happen that often. What I did is I had seen this and I said, oh, there's not enough room to this level here. Well, there was enough room if it got all the way up here to target 1. And if it didn't get to target 1 and move back, most likely I would be able to move the stop up to near or above break even. I was looking for extra confirmation, I'm thinking. And what you do by getting extra confirmation is you usually get yourself in a fully extended mode and you end up losing. It's a self-fulfilling prophecy to the negative side. All right, let's go back to the trade analysis again. What happened? Well, one, it looks like I entered late. I did follow the rules, so that also what I did right. What I also did wrong is I didn't enter the second time if I was going to follow trade off of this. And why? Were my entries correct? Well, yes and no. The entry I took was correct. The one I passed up earlier and the one I passed up later, that was just, should not have happened. So lessons learned are get on the time frame that you're going to be on and stay with it. Trust the system. Now, if I don't trust the 6, then I need to stay with the 10. I've got to find a way to deal with the higher volatility and the bigger stops. I have to find a way that I can either downsize from 2 contracts to 1, or I have to take the 6 and know that I'm going to have some extra stop outs. That's just going to happen. All right. I hope you guys found this useful. The first video here is the pilot talking about, really from a business perspective, how after action review process is. And then this last one down here is the YouTube video that I did of trades made on the 1st of August. It was not a pretty sight, but I did a post-trade analysis of my trades, and I hope you find that useful. I think you should do that on every one of your trades. All right. Thanks for watching. I hope to see you guys in the trading room again real soon. Take care.